with markets getting crushed, is now the wrong time for the Federal Reserve to hike interest rates? Former Treasury Secretary Larry Summers thinks so, saying that the Fed would be making a dangerous decision raising rates now. Charlie Gasparino on Mr. Summers and the Federal Reserve and whatever you want to talk about.
Well, he's not alone. I mean, if you read Larry Summers made that comment in, I think, the New York Times or the Washington Post.
Washington Post and FT.
And the FT, the Financial Times. There's a great op-ed in the Journal. I forget the gentleman's name, but he's more right of center than Mr. Summers. Essentially saying the same thing, that now that they should have raised it 8 months ago, that's when the economy was seemingly improving. Now to do it now is crazy. I will say this: if this economy can't take a 25 basis points hike in the Fed funds rate, then we're in really deep. You know what? I mean, this is a problematic economy. I mean, I think it's problematic anyway. But if the Fed, which has access to numbers that we don't, if they really believe that 25 basis points is going to implode us, when we do know that keeping rates this long creates weird anomalies in the market, it forces investors to take risks on certain stocks that they shouldn't take a risk on. They plow money into internet stocks that aren't worth that much. We've seen this in the past. That's what low interest rates do. I mean, listen, the effect has, this is the state of, it's called the wealth effect, right? Right. Fed took down interest rates, long and short. Why? So investors go out there and don't put their money in the bank, but buy stocks. Okay, at some point, you buy too many stocks by keeping it too low. You buy the stocks that you shouldn't buy.
Well, I wonder,
and that's the question. Does the Fed raise rates now to sort of bring some equilibrium back to the economy? And if they don't, what they're saying is this thing is in bad shape.
All right, there are a bunch of things I want to talk to you about. But number one, if they don't make a move, maybe not in September, but by the end of the year, what are they saying about the health of the economy? That could freak investors out even more, couldn't it?
Yeah, I mean, there is a psychology to all this. I read a book that George Soros wrote several years ago, and he talked about
I'm just kidding.
Well, it was a very esoteric book if you can get through it, but he's brilliant, and he talks about the mind of the markets, and markets do have psychology, and if you're telling people that things are really bad out there, that's why we've got to keep rates low. There's a propensity for people to go out and say, oh my God, things are really bad. Let's hoard our cash. Let's buy gold.
There's one thing, given what investors have been through in the tech bubble collapsing in 2000, which was nothing compared to 2008, but people have been so burned that psychology could play into this downdraft in a way that it hasn't before, that people are so willing to sell just ad hoc and just across the board.
The only thing different, the reason why it's hard to sort of compare 2008 and 2000 in particular to now, is that the retail investors kind of out of this market. I mean, they're in it through mutual funds to a certain extent, but these are professional investors that are trading, and pension funds that are holding this stuff, which indirectly reflects the wishes of the individual investors. But individual investors aren't huge consumers of stock right now. They have a lot of money in bonds. They have a lot of money in cash.
Yeah,
they buy gold. They've been much more. So, I mean, if you raise rates and markets sell off, yes, their 401ks may take a hit because that's where they have some money in. But, they also have money in a lot of. I think the individual gets hit less than the institution.
Listen, if you look at mutual fund flows, every week there's billions of dollars coming out of U.S. stock funds. Every week for years and years and years, and money going into.
So then what's? So why can't they raise rates?
That's I agree with you. Well, I'm not disagreeing with you.
The only reason why you don't raise rates is if you feel the economy is so tenuous that to raise rates puts us back in a recession. That's something that Hillary Clinton would not want if she's running for president. I mean, there's an interesting political dynamic going on here with the market. If you saw, Chris Christie came out on Fox News basically blaming the stock market gyrations on the Obama economy. Carly Fiorina, I'm assuming, is going to say similar stuff to Trish later on today when you see that interview. There is a political dynamic here that I think the Republicans will seize on if they can. And also, I believe, if things get really nasty, I think this helps Donald Trump.
We'll see how he approaches it, because he was basically, the tweet that he put out, I don't know if we have that tweet made up. We can get to it later, but he essentially said, this is what happens when you do business. I don't want to paraphrase, but I'm about to. This is what happens when you do business with China, because the selling is in relation to what's going on in China. So it had a very protectionist tone to it. Yeah, I can pull it up. You keep talking.
Protectionism doesn't. does not have a good record when it comes to economic growth. We should point out that most economists, both left and right these days, not the far left and not the far right, but the sort of middle ground, someone like Larry Summers would agree with this, Ben Bernanke, and others of more, of center right would say the Smoot-Hawley tariffs
during
of 1930, right after the 29 crash, had an impact that was bad on the U.S. economy, because when we started going after them with tariffs, they came after us with tariffs, and it slowed the global economy down.
Really quickly, as I have long stated, we are so tied in with China and Asia that their markets are now taking the U.S. market down. Get smart, USA. All this calls like
but here's the problem with Donald's statement. Their markets aren't taking down our markets. It's their economy that people is translating into that leads to slower economic growth. You see what I'm saying here at home, because they're a trading partner. It's not that I don't think U.S. investors and U.S. banks are leveraged to Chinese internet companies. No. That's the problem with Donald. He sounds good, and I love the guy. Personally, great guy. But when you scratch the surface, a lot of what he says, Well,
let's keep talking about that, because
may not make sense.
My prediction is the political candidates are going to blame the Federal Reserve, too.